Morgan Stanley recruiting us? Is that?
Oh, no. No, the bank owns our hedge fund, but we're not really a part of it. We invest in financial service companies, and we're trying to understand the residential mortgage business.
How many loans do you write each month?
About 60.
Yeah. What was it 4 years ago?
10, maybe 15.
Yeah, I was a bartender. Now I own a boat.
You own a boat. So how many of these are adjustable rate mortgages?
Well, most.
Oh, yeah.
Yeah, I'd say about 90%. The bonuses on those skyrocketed a few years ago. Adjustables are bread and honey.
So do applicants ever get rejected?
Seriously? Look, if they get rejected, I suck at my job.
Well, even if they have no money?
Well, my firm offers ninja loans. No income, no job. You know, I just leave the income section blank if I want. Corporate doesn't care. These people just want homes, you know, and they go with the flow.
Good for you.
Your companies don't verify.
If I write a loan on Friday afternoon, big bank is going to buy it by Monday lunch.
Yeah, same here.
Could you hold on a second?
Yeah.
I don't get it. Why are they confessing?
They're not confessing.
They're bragging.
All right, welcome back, guys. One of my favorite scenes from that movie. I have to watch it again. This is one of the greatest ever. All right, I'm going to talk about... This will be a quick video in a couple days. Maybe Monday, maybe Sunday, maybe Tuesday. Depends what I'm doing. I'm going to go into detail of what's going on. But I'm going to make a quick video tonight for this weekend so you guys can watch it. To tell you guys what I'm thinking, what we're doing. And, you know, it's been quite an interesting month and year so far. So the reason I wanted to show that scene was, if you're on my Twitter, which you should be, let's take a look at what's going on here.
I had 60 rental properties and about $10 million in real estate owned. But wait 1 minute.
Got 242 units, $32 million in real estate.
Boom.
2,500 units, $175 million.
Boom.
220 houses, $25 million.
Boom.
About 1,500 units, $45 million.
Boom.
4,288 units, $335 million.
Boom. I thought I was...
All right. I think you guys get the point. In the past 2 years, obviously, a lot of people moved around. And homes were going for auction. And there is a small limited supply, which is, in my opinion, artificial. Because a lot of big players, like Blackstone and whatnot, are in the market. And I think they're scared to death of holding the bag. And this all ties into the Fed rate hikes and whatnot. Now, in my past video, I said I think they're going to raise rates more than 50 basis points because the alternative is they do let inflation run away. And once it runs away, the Fed has, like, it's done. Their credibility is gone. And they cannot lose their credibility because if they do, the musical chairs game will come to an end very abruptly, and politically that is, they're not going to do that. They want to keep the music playing for at least a few more years, and that's just that there's some geo stuff going on a macro global scale. I'm going to talk more about that. So let's first take a look at what's been happening this year. All right. Now, I called it. And we've been short in the private group like all year. Not the entire time, but I've been putting on shorts, taking profits, timing the swings, and we've been doing very good. Very good. As everyone else is crashing and burning and losing everything, I've been going long the VIXI. Now, so when I short, you have to understand, shorting's very dangerous. Outright shorting, very dangerous. Because you have unlimited loss, technically. You can end up owning money to the brokerage house. So what I like to do is I like to long inverse ETFs, and that's how I short the market. So as the market goes down, I make money. And I've been saying this entire year, even before this year started, Q4 of last year, 2021, I'm like, hey guys, I'm raising cash and I'm selling some stocks and mining stocks and commodity stocks. Although some of the commodities went way up, I missed a lot out on the energy trade, the oil trade, but it doesn't matter because we made some good trades with the volatility and the SQQQ, and we raised some cash by selling stocks. And some of the guys in the private group listen, they sold some crypto, and we're flush with cash. You have to understand, the person who wins is the person who stays in the game while everyone else loses all their money. Because guess who buys the bottom? The guy who raised cash, and if they were good enough, they have the skills, they made money while everyone else lost it on the way down, right? All right, so year to date, let's start off with crypto, then I'll get into equities. Year to date, Bitcoin down 56%. Ethereum's actually down 70%. ETH 2.0, where are you, bro? Like, it's down. Everything else, it either got rug pulled or blew up. It's like a Ponzi, right? Like Terra Luna, now it's Celsius. What's next? What are the other so-called? They're fake DeFi, guys. Fake DeFi. The only real DeFi, in my opinion, is Hex. Sol, probably down 82% this year to date. Probably gonna, who knows, right? Avalanche, what's that down? 85% basically. What else? They're all wrecked. They've all lost all their money. It's sad, but Richard tried warning everyone. I've tried warning everyone on Twitter, and it is what it is. Right now, everyone's like, but Laszlo, look at Hex. I mean, yeah. After something goes up over 1,000,000%, is a 90, 95, 96, 97 shit. 99% dip. Is that reasonable after 1,000,000 up? Yeah, why not? Now, it's a different pain depending on when you bought, right? So if you're loading up, like us on the private group, since day one and so on, I mean, you could have been loading up all of 2020, and even I wouldn't say halfway, but at least 1/3 of the way in 2021 into spring, it was below half a penny. Did you go from multi-millionaire to not so much? Yeah, of course, if you've been holding. That said, but if you've been staked, not that bad. Not that bad. If you've been staked this entire time, depends what kind of staking strategy you made. In the private group, I told everyone, like, make a staking ladder. I don't really hold liquid much, because if you hold liquid Hex, you're being diluted. And I don't want to give away too much alpha. I really don't. Because, it's times like these is when there's blood in the streets. That's the time the decisions you make will echo for eternity, essentially. Where you set yourself up for the next few years to be set. Alright, so listen. A couple videos ago I said, hey, if you liked it at 50 cents, you'll love it at 5 cents. You'll really love it at half a penny. Will it go there? I don't know. But if it does, right? Oh shit. What if it goes below? That'd be even better. Pulse Chain I thought would have been launched by now. Well, it didn't. I do believe at this point you might as well wait a month or two, maybe 2 more months, maybe 3, for the bottom, for equities, the stock market, crypto, everything down, annihilated, destroyed, and launch right at the bottom of the bear market. I think that might happen. I don't know, because I don't know how far along they are. I heard they were changing some protocols for the pulse chain going to go. Whatever. All right. I don't care. I at this point, if you just DCA in and pulse chain launches anytime in the next 6 months, and you just hold on for a couple more years, I mean, that's what I'm looking at. Not financial advice. All right. So, and don't forget, you're going to get a copy on the Pulse Chain Network as well. And I don't want to give away too much, alpha and stuff. And there's other games and plays, and that's for the private group. But, yeah. So that's all I really have to say. I'm not even worried. I have no stress. I'm not worried about Hex at all. I'm actually very excited, and I'm hoping it goes much lower, because we got to get these early adopters out, these losers who got lucky. A lot of them, what they do is they'll take like 50 million hex, they'll take 100 million hex, and they'll just keep staking it month after month. They do a rolling stake, and then they keep selling the yield they generated that month. And they sell it no matter where the price is at, and then they just live off of it. And it, in a way, it's a little parasitic, but it is smart on their behalf, so I can't hate. But it's dumb in the long run, because that kind of shows me they're not real believers. But they might have more stakes further out. But if you want to maximize the bear market, what you want to do is stake further out to maximize your T-shares. Here's the thing. The T-share keeps ratcheting. So they are doing that, but they eventually have to stop doing that. I'm not worried about them. This is a huge shakeout, and it's great for the long term, next year to 2 to 3, 5 years in Hex, because we want them out now. So, yeah, please keep dumping. And it gives you an opportunity to load your bags, right? So, everything's going accordingly to plan. Guys, how many times did Bitcoin drop 90% or over 90% in its lifespan? Like 6, 7 times, something like that, or more? No, it was like 14 times. I don't know. But listen, this is normal, believe it or not, in crypto. As long as you're holding a crypto that you know is going to survive and is real DeFi and provides real trustless yield, just go outside, man. Today I was mountain biking all day. Just go outside, enjoy life. We're in a recession. Just make money, get a job, do a side hustle. Keep yourself preoccupied, because idle time, idle hands lets you do dumb things. You think too much and you overthink things. Listen, it's down. It's on a huge discount. There's a documentary coming out. There's all kinds of stuff coming out in the future. And it's immutable, right? 100% uptime. Whatever survives this crypto bear market is going to do what Ethereum did, right? What Bitcoin did, right? Even Cardano, a ghost chain, right? I was there when Cardano launched first on an exchange. It was a fraction of a penny, and I rode that sucker up. At the height of the bull market, it was like $3. I had millions and millions and millions of Cardano, all right? And that was a ghost chain, technically a failure. Hex is not a failure. It's like the only thing up. Everything else is blowing up, left and right. Stablecoins blowing up. Everything blowing up. Are we blowing up? No. As a matter of fact, Ethereum gas fees are going down. NFTs are blowing up, whatever. So the congestion's coming off of the Ethereum blockchain. Fees are going to be cheap. And Hex is running flawlessly, doing what it does. The community's still here. The staking class is growing. That's the only thing that matters. So chill out. All right. That's what I believe. I could be wrong, right? So, hey. All right, let's take a look at Bitcoin and Ethereum while I'm looking at this. Where's the chart? I just had it up. It's right here. Bitcoin's on the left, Ethereum's on the right. These are weekly charts of both. Here's my blue line. My blue line, it's an awesome moving average line. All right. At 15,600, around 16,000. Now it can wick all the way down to 10 grand, no problem. But, you know, that's a target for me. Is it a buy target? No. It's like a target of some sort of support. It did hit it during the COVID dip, right? And then just rebounded real quickly. You had like a day to buy it. And it went from $3,000, 3,800, and it shot up within... Here, let me blow up Bitcoin here. Yeah, I mean, you had like a day to buy it at 3,800. And you know what? In the private group, I told people, I'm like, I'm buying some Ethereum, and I did, and I should have bought so much more. But really, what I should have bought was Hex, because if I would have done that, oh my god. Anyways. But I think there was a couple guys in my group who did. Anyways, yeah, within 3 weeks, it shot up from that low. Shot up 88%. Now listen, at that time, if BitMEX didn't turn off their servers, the entire crypto market would have like gone to zero or something. That's what I hear. So, you know, the bigger the risk, the bigger the reward during times like that. You're either catching a falling knife or you're literally buying near the bottom and about to make a ton of money. Like one of the best trades in your life. So that's what it feels like, and that's what is literally what's happening. But anyways, so, you know, I can see an airdrop with the stock market when that starts dumping again. You know, a nice another 20% drop on Bitcoin. And my blue line's around 15,800. Alright, and is that a buying signal? I don't want to say that because I wouldn't be surprised if it did go to 10,000 or lower. Because Michael Saylor, MicroStrategy, I believe he's still in the market, and he's got to get blown out of the water. And honestly, there's been a lot of collateralized Bitcoin, like derivatives, for lending. And I don't know how overly leveraged everyone is, but from the sounds of things, it's pretty bad. But there's my blue line. It's pretty much all I'm going to show you. It might be a temporary bottom. You know what I mean? It might just fall to my blue line, stay there for a few weeks, and then go lower. I don't know. I'm not Nostradamus over here. But at 10,000, let's take a look at the monthly. Well, I got a moving average at 9,300 on the monthly. Let's go to a 3-week. What would it look like there? 3-week. Yeah. I'll make a more of a detailed video. Let's see. We'll see where it's really going. It doesn't matter. All I know is it's coming back down. I mean, if we look at price action and candles, there's just a ton of support around 8,800 to 10,000. So that would be a nice support area, right? Yeah, I mean, I drew some stuff. Looked at volume and purchases. Yeah, around 10,000 all the way to like 8,800 in that area. There's some decent support. It's around that area. All right. real quick, Ethereum. My blue line is at 850 bucks, somewhere around there. So, and you know what? Ethereum did break below 1,000 already. Past few days, or did it? Well, not on this chart. I heard it did. Well, it literally went to 1,000. So there you go for that. It doesn't matter. I believe there's more downside for crypto. We haven't seen full-blown capitulation just yet for crypto, and we haven't seen it for the stock market either, not the retail investors. And honestly, it's been a very orderly decline in the stock market, and crypto is correlated to the stock market. And honestly, Hex has been very correlated to the rest of crypto as well, or Ethereum mainly. So I'm going to leave it at that for crypto for now. All right, let's take a look at the stock market. Let's take a look at the NASDAQ. It's I wouldn't say it's leading the way, but I think the Russell is leading the way. 2000. The 200, this is a 3-day chart. Did hit some support this week. That's why we got this little bounce. Very weak bounce. If we look at the weekly chart, this is a 3-week chart. I accidentally hit that, but interesting to see. Let's go to the weekly. We broke the 200-week moving average. Or no, the 100-week moving average. Very interesting, right? Let's take it to a monthly. I'm curious. Oh, yeah. So 8,800 on the NASDAQ Composite 100. Why not? It's a giant bubble. Why not? Now, here's what I want to really emphasize in this video today. Why should anyone buy stocks right now? Why risk on right now? Is there any good reason or bullish possibility or reason to be putting risk on? I don't see any. Not one. Not one. All I see is risk, red flags everywhere, and some serious macro problems. If you wanna get a good detailed explanation of like the macroeconomics, Schiff is really good. I mean, he's the best at explaining it and breaking it down with the economic data coming out. Right? So when I trade and when I decide to put on call options, this and that, I do look at the economic calendar ahead of time to see what's coming out, and then I kind of have to feel for it and predict if it's going to be worse than estimate or not. And that helps me, gives me a little bit of an edge besides TA, this and that, to win put on my my trades, okay? So right now I don't see any reason to buy the dip. Why? Like, no technical analysis, no reason whatsoever. We're in a recession already, and I've said this numerous times. I said it started winter of this year, and no one else called it like I did. Of course, nobody knows I exist. My channel's small; it will never grow, and I never get credit or anything. But it doesn't matter because I'm making money. But again, my original thesis was in June, July, they'll keep raising rates until they break something, until the markets crash, and then they'll do an about face and pivot, and then do more QE for political reasons and whatnot. Here's the thing, I'm pushing it back a little bit, like a month or two. And the reason is because inflation's not coming down. The economic calendar and the data has been atrocious, and it's been really bad on inflation. I believe the last print was 8.6 for the CPI, which really means we're at 17% inflation, and that's insane, guys. You're losing like 17% of your paycheck year over year as of now. And Schiff actually says something pretty incredible, which blew my mind. That's because the stock market and everyone on CNBS, on the financial media, they keep saying, yeah, but the labor market's strong. The labor market's strong. Everyone's employed, which is kind of fluffing the numbers as well. Because, yeah, everyone kind of got their jobs back. But a lot of people just stopped working, period. And they're not even considered in their data in the employment numbers. Anyways, they're saying the labor market is strong. And I guess it's still kind of there, yeah. But here's what's funny. If everyone is getting so if their paychecks they're not getting wage increases massively. The service sector, the restaurant, yeah, they're paying more because people won't go back to work. But another reason is gas prices and inflation. Like, why go work if you're not really, with the gas costs, with commuting, buying lunch, this and that, are you really even making any money at the end of the year with inflation? And you are, but not a lot. But here's what Schiff said. So let's say you got a 3 or 5% pay increase, but inflation's running like at, let's say, 20% for easy math purposes, and you got a 5% wage increase. You're still making 15% less. You got a wage cut, technically. And a wage cut of 15% on the workforce is kind of like there's 15% less people working. Isn't that crazy if you think about it? It's like 15% less people are working because there's 15% less money that the entire working class is making overall. And I thought that was interesting. Now, here's what's crazy. We're going to start seeing massive layoffs pretty soon. We're already seeing it in crypto, and now it's going to start going into the financial markets. We're starting to see people in the real estate market, right? The refinance market. They're all getting laid off. I have a friend who just got laid off. And it's happening. This is like 2008 all over again. And that's why I wanted to show that clip in the beginning. So we're in a recession. Pretty soon the economic data is going to get really bad real quick. We're going to start seeing layoffs. Why buy the stock market? Here's the thing. So people might think, oh, you should buy the stock market. It's a hedge against inflation. And we all know that the Fed's going to eventually start printing money again. True. But the question is when? Right? I think so Jerome Powell, the last FOMC this Wednesday, he was pretty hawkish. And he made it very clear. We need to get inflation down. And they're going to have to keep raising rates. And they need to get inflation down. Because if they don't, they can't do stimulus. They can't print money again. So they got to get inflation down. They got to crash equities and the housing market. And they're doing QT. They're tightening. They're letting all the trillions starting to roll off their balance sheet. I believe it's over $300 billion a month. Do you not think that's going to affect equities and bring more? The economy is going to contract even more. Here's something else. Europe, the ECB, now they're talking about tightening rates a little bit. Because whatever the U.S. does, the rest of the world kind of has to follow. Except Japan. Apparently they just want to go into hyperinflation. It's crazy. They have a different situation over there because of their trade balances and whatnot. I don't want to get into it. It's too complex. But or it'll take too much time. But what you see in Japan, because they had a huge housing bubble in early 90s, late 80s. You should watch something of the yen. I forgot. Great documentary. Anyways, that's why the DXY, by the way, is so strong. It's because of Japan. It's because of Europe. It's because of China. China's printing right now. And that is artificially propping the dollar right now. Now, on that backdrop of the strong DXY, which right now it's at 104, and it is sort of the milkshake theory, Brent Johnson's milkshake theory. I believe it's been playing out this entire time. Because of all that, it really does behoove Jerome Powell here to actually keep tightening and damn the markets, damn the financial system for now until they really start breaking things. And I believe they're going to keep tightening rates. Maybe another, maybe 2 more rate hikes at the most, really, to be honest, until the banking system is really in trouble and all the debts are really starting to really default all over the damn place, right? But they need to stop inflation or slow it down. Ideally, I believe they want to get it back down to 5% or 4%. There's no way they're going to get it back down to 2%. Why? So they can do QE and reinflate the markets and everything later down the road into 2024. Okay? But for now, because the U.S. is ahead of everyone else on the planet, essentially, by raising rates just a little bit like they have been, and 75 basis point, it was like, oh my gosh, to everyone. But, which historically is not a lot, but it was more than expected anyways. It's sucking capital out of the world, if you think about it. And all the debts are denominated in USD because the US dollar is still the reserve world currency. And I believe, honestly, I think and that takes me into digital central bank coins or whatever. But let's just stay on topic for now. On the grand macro bird's eye view, this benefits the U.S., raising rates and crashing their own stock market to cause a deflationary spiral temporarily, a mini depression basically this summer going into Q4 of this year, and propping up the dollar and then sucking capital out of the rest of the world because they're behind. They're actually even worse than the U.S. when it comes to debasing the currency, keeping yields artificially zero or negative, right? Like Europe's in a mess, guys, compared to the U.S., believe it or not. Even though the U.S. is very bad right now, economically, not just inflation, because of the gas prices, right? I think the gas prices is where this administration screwed up royally, right? If they just would have let them drill, the U.S. would actually be really, really well off compared to the rest of the world. But it still is weller off. But I mean, at $8 a gallon, it starts getting very Mad Maxy out here because of the distances in the U.S. Everything, the commutes, everyone's average work commute's like 30 minutes. It's crazy. So, and the logistics, the supply chain, all the food and goods and even services, the distances in the U.S. are very great. And every dollar the gas goes up, it's like an enormous tax on everyone. And the supply chain starts breaking, and there's diesel fuel problems, and I don't want to get into it, but go on my Twitter. So, that's the plan. That's what I think they're doing. They're crashing the markets, and they're going to keep crashing it. The market can come down a lot. Look at the Dow Jones, guys. Look at the Dow Jones. Also, this benefits the U.S. because energy prices will come down with everything else eventually. And we just finally started seeing that today. Today's Friday. the 17th, and oil finally started coming down, which I've been saying for months now. I'm like, they gotta get oil back down, and they gotta crash the stock market and everything to get commodity prices and energy down. And that's why I've been saying I'm raising cash to buy the dip on energy stocks, commodity stocks, gold and silver, mining stocks, all of it, right? And finally it's starting to happen. Now look at the Dow Jones. This is a monthly chart. Can the Dow drop another, like 15%? Yes. I mean, historically, if you look at this, it's not like, it feels like the end of the world to a lot of people, but it's, if you just zoom out, there's way more downside on this bubble. I mean, what if the stock market could crash and revisit the monthly 200 monthly moving average, and it's still relatively much higher than it was back in the Dow Jones, than it was back in May of 2016. It's still up if it crashes to the 200 month moving average. Let's take it to the weekly because nobody talks about the monthly. But yeah, look at my blue line. Can the Dow revisit 27,000? Yeah, and it's still fine. It's still technically massively up compared to prices in 2016, 17, 18. Still up. So what gets you more votes? I mean, yeah, boomers are going to be angry. But you know what? But people are actually feeling inflation. Your average normie Joe Sixpack is like, what is going on? I just went to like this local like hamburger shop. The hamburger is half the size what it used to be. The prices haven't really gone up much. But the food is literally like, I feel like I'm a giant holding a hamburger, dude. I'm like, I'm like, and I'm not even that big of a guy. I'm not tall. I'm 5'8", 200 pounds, but I'm not like, 6 foot or higher. Those guys, I mean, when they buy food, they literally have to feel like they're holding baby food in their hands. Like, seriously, because I'm holding this hamburger. I'm like, it's nothing. It's like a hockey puck now. Like, this burger literally was twice the size 4 years ago, or even 2 years ago. So it's getting ridiculous. Like, Clown World's getting a little ridiculous now. Like, your cereal boxes are literally getting smaller now. Everything, when you go to a grocery store, besides the empty shelves and things missing here and there, you're just kind of like, I feel like a giant. Like, I'm even the peanut butter in the jelly jars are small. Everything's just shrinking and shrinking and shrinking. The only thing they can't shrink is a carton of eggs. And that is actually a great chart to pull up. I saw it on Twitter the one day. And that really shows you the inflation. Oh, yeah, if you go to my Twitter, actually, this is the ultimate inflation barometer. Like, I've drank these all my life. It's the Arizona iced tea in the can. It was 99 cents all my life. It's $1.29, $1.30 now. That's 30% inflation, guys. 30%. All right, let's get back to the charts. So yeah, I believe there's more downside, and I believe the markets could handle more pain, and I believe it's what they have to do. They don't want to do it, but it's what they have to do. If they want to keep the music playing for years on out, a little more longer, they have to slow inflation, or at least stop it for some time, 6 months, a year, and then they're going to do it all over again. And that'll be the ultimate wealth transfer. And when the Fed capitulates and they do yield curve control, and the repo market's like over $2 trillion again, just like 2019 and all this shit, right? I guarantee you, like, WW3 is going to pop off magically, right? Taiwan, and then that'll be the excuse or whatever. They're going to do UBI, they're going to do more QE, and they're going to reinflate everything. And that is when you're going to see gold, silver, mining stocks. You're going to get 50, 100 baggers. Crypto's going to just just take off like a rocket again. And that'll be the ultimate melt up, blow off top. And that's it. You're gonna read about this for the rest of your life, for decades, what happened in the next few years. And we need to capture all of that value, all of that wealth, right, for ourselves, so we could have wealth. And I highly suggest that the biggest investment should be self-sufficiency and self-reliance, and not having to rely on the system, on the grid. By the way, at the Hoover Dam, Lake Mead and all the other reservoirs, is the largest reservoir in the U.S. It's like it's drying up. They can't even. They've already shut off a bunch of the electric generators that are the Hoover Dam powers, right? It has electric generators. There's not enough water to power them. Oh, by the way, I do have uranium stocks. I do believe that's going to be a big energy play, right, for electricity. Because, guys, solar and windmills, if it was actually efficient, then it wouldn't need the subsidies, and people would just do them without the government handouts to do them, right? So they're not efficient. They don't work. Anyways, what else? Let's take a look at bond yields. The yield curve inverted again, and then it re-inverted, but the short end of the stick, basically, why would you get a 30-year bond treasury when you just get a 3-year that's like paying just as much? Less risk. You only have to wait 3 years for maturity. And technically, you don't have to wait for maturity. It's not as good as Hex. That's all I gotta say. Anyways, yeah, here's the VIX. So the VIX should have done better as of late, which is very suspect, if you know what I mean. But I do not, for some weird reason, it's been an orderly sell-off. There's been days where it's 1,000-point drops, but we have not seen the capitulation just yet. We haven't seen the retail investor freak out just yet, which is weird and crazy, because if you look at all of these growth stocks, Tesla is holding up fairly well compared to everything else. So is Amazon. But even they are down, guys. I mean, if we take a look at the stock heat map for the year to date, Amazon's down 37%. Berkshire Hathaway down 10%. Okay, so here's the big high flyers, right? Google, the fangs, right? Google's down 26. Damn it, they're holding up. Apple's down 26. Not too bad. But, I mean, NVIDIA, obviously that has something to do with crypto. That's down 46%. But, Facebook, now Meta, is down 52%. But this is what I wanted to talk about. Look at this. Look at this. ARK Fund. This thing has to be Lehman 2.0. Are basically like Bernie Madoff's fund. It's down 77%. This is not a crypto, guys. This is an ETF on, I forgot which exchange it's on. I believe it's on the NASDAQ. I mean, it's probably NYC as well. Look at Netflix, the stay-at-home stock. It's down 75%. Absolutely annihilated, guys. Here's Home Depot, though. I do believe Home Depot has more to drop with the housing market, but even that is down 36%, and it really started dropping this week. So I believe people are starting to realize that the top is obviously in for real estate, and home improvements actually falling as well because of high inflation. People just their savings is starting to dry up. Their discretionary spending is essentially gone. People are just not spending like they used to because they can't. Because, utilities, energy went up, gasoline, right? Food, everything. You guys know. So, again, another reason why I don't think people just don't have money to buy stocks, guys. If anything, they're selling stocks to now live off of, right? And eventually, I do believe the boomers are going to panic here. And that's when the volatility is really going to pick up. And my call options are going to do really well. So, what else? Let's take a look at gold and silver. So I haven't been buying. I've been raising cash and selling, but I mostly did that at higher prices months ago. But recently on this pop right here, back up to 1883, I took some off the tops on some more mining stocks. Mainly because I think when margin calls happen, like they did back in 2008, and I've showed you guys, I've talked about this plenty of times, I think it'll be just complete risk off, sell everything. Everyone's getting margin calls, and they're going to have to sell all of their positions, including this. And, the bankers kind of know that, and they take advantage of it. And then they'll short it and just dump metals. Because the canary in the coal mine, the ultimate kryptonite to central bankers is gold and silver. It just is, right? And to tech stocks, they need cheap silver, right? But eventually they will lose control, and it will be when the Fed capitulates. And then it dawns on everyone that there will never be normal. It's just QE, Infinity, Helicopter Money, UBI, and just there is no normal anymore. There's no chance ever, because it's a mathematical impossibility to normalize interest rates. And once Wall Street and the bond market really realize that, it's a commodity super cycle. And I don't care what anyone says, even RH, it will have its time to shine. It really will. And the mining stocks will do good. And I don't like throwing all my eggs into one basket, right, guys? Also, I'm looking to buy the dip on energy. Oil. Look at this. This is great. This happened today. This is a daily chart of light crude oil futures, WTI. Awesome, man. Awesome. I really want to see oil somehow at least get back down to $90 around there. And I'm going to buy the shit out of this dip, right? But honestly, maybe start DCAing around even 100. But I think they're going to try to get it below 100. And here's what the narrative is going to be. The narrative is going to be, we're in a recession. And that's why the demand for oil is going to go down. It's going to crash. And it'll be like a it'll be short-lived. But if it does, break below 100, you might get an airdrop all the way down to around the 90. If it does drop back down to the 80s, I mean, I'm not all in or anything because I'm diversified, but I'm going to load up more and more. The more oil falls, the more I'm going to load up for the long term, for the next few years. And there's some good ETFs to do that. Yeah, here's the NASDAQ composite, just a clean, nice chart. There's support. Here's what, on the NASDAQ, this is where I'm targeting, this area. Around 8,200, 300, maybe even 8,000. Why? Why not? Right? If we're in a recession, why not? I believe the next GDP numbers are going to be even worse. So, and a lot of people are going to say, this is what they're going to say on CNBC. Well, if we're in a recession, the Fed has to pivot, so buy the dip. That's what they're going to say. in a way, they're right, but it's not. It's about when, right? So, who has the money to buy the dip? The smart money? Yeah, they do. But it's when. And I do believe they want to get at least one more rate hike in, and a nice size one, another 75 basis point. Ideally, they probably want to get 2 more in, but I don't know if we're going to make it. If we're going to make it past July, August, or September rate hike. I don't think we'll make it to September. I believe by September the market's going to be down here. I wouldn't be surprised by the end of July, around August, like the Nasdaq is down here, right? Because pretty soon the retail investors and everyone's retirement 401k, those people are going to start freaking out pretty soon, I believe. I believe once the Nasdaq drops another 800 points, we're finally going to see some panic and they'll get washed out. And then I'll be looking to buy the dips. That'll be your big opportunity to buy the dips for the commodities and the energy sector and gold, silver, mining stocks and this and that, right? And I do believe crypto, though, is going to lag everything else. I believe its bear market's going to, because, I want to see Bitcoin at much lower prices. And we need Saylor out and everyone to get wrecked in crypto, like as every bear market in crypto, right? There'll be a bull trap. Actually, I believe the bull trap's right now. People think we're about to shoot back up to 30K on Bitcoin. No, a lot of people think that, and I don't think so. I wouldn't risk it. Why risk it? This is the worst environment to risk any bullish trade, short-term trade. Here's Bitcoin on the left. Real quick, let's just take a look at it. This is a 3-week. Let's take a look at the daily. Yeah, this looks like just another bearish pennant forming on the daily. I wouldn't risk it. I was just talking to a friend. He's like, "Oh, I just went long. There's gonna be a little bull trap." I'm like, "Dude, no. The stock market, we could have a Black Monday again, this weekend. It could just there's nothing here, guys. What's the support? This little shit right here? I don't call that. That's not. I wouldn't risk it. It could just this weekend. It could just drop real quick to 13,000, no problem. I wouldn't risk it. Plus, there's moving averages about to death cross right here anytime now. So. And it's below my blue line. So, look out below. All right, let's end it with a little bit of news. Deflationary tsunami on deck. A tidal wave of discounts and crashing prices. I do see that for Christmas. At the end of this year. For the fourth quarter. It'll start. It's already starting. Because nobody's buying anything, so retailers have to start selling their inventory, and their inventory is just starting to really build up. And they bought a ton of inventory, maybe for anticipation of high inflation. So now they're just stuck with all this inventory that they can't sell. So guess what they're gonna do? They're gonna start doing some fire sales. I guess if you want to get some. Guys, I suggest if you buy stuff you're going to need to be self-reliant, power tools, stuff like that. Maybe a trailer or generator, I don't know, stuff like that. Tools, sockets, wrenches, stuff like that. I already bought a lot in anticipation of inflation. But this will be a short-lived mini depression type deflationary pocket of opportunity, right? To maybe load up on things you need. That said, I would rather buy the dip on stocks and crypto, right? So I already bought this stuff. I don't want to read this. This video is getting long. Where am I at? 54 minutes. I got to get it within the hour. If it's over an hour, like half of people won't watch it. Okay, housing crash imminent as mortgage rates explode, price cuts soar, and buyer demand collapses. You know, it'd be cool if you could sell your mortgage with a locked-in rate, but you can't do it. But that'd be hilarious. I wonder if someone was gonna try to like make that asset or something, like some sort of on equities. But you can't. I don't think you can, or I don't think it's possible. Anyway, so people are just stuck in their homes that they just bought if they have fixed rate mortgage. Like, why would you sell it and then buy another home but have a higher rate? You know what I'm saying? Cash will be king in this real estate environment that we're about to go through real quick. And will homes ever reinflate? I do think in the long term, maybe, because inflation will be running so high that no one's going to build homes for maybe a decade or two. Although that's saying, I do believe that the population is about to like start dropping off. I mean, the boomer generation, they're only getting older here. And the Gen X and millennials, are they having kids? Not really. So, and the people coming into this country, I do believe they're going to start exiting once things get really nasty. But who knows? It's tricky, you know? I just think we're going to get a nice discount on home prices because no one can afford homes right now anymore. And people who just knee-jerk bought during the COVID chaos crisis, I believe they're a little in over their heads, and they had that fake wealth effect. They were looking at their brokerage account. They're like, wow, I have like $1 million in equities or stocks, right? I could afford this $500,000 home, which used to only be a $300,000 home, like, 5 years ago or during 2011. And maybe some of them got adjustable rate mortgages. Or even if they didn't and they have fixed, the bigger the home and the bigger the property, and taxes are only going to go up, the more the maintenance and the utility costs are there, and it eats away at your savings. And now they just saw their stocks crash. They haven't crashed yet, but we get another 20-30% drop in equities like across the board, give or take 10%, depends what indice. But their stocks are crashing. So the indices are higher than all the stocks within the indices because of the derivative nature of Ray Dalio's fucking genius ass creating all these index funds, right? So, but once the indices fall, once the S&P falls another 20%, the NASDAQ drops 30%, the Dow drops like 16-18%, the wealth people thought they had is just gonna like poof, vanish. And they're gonna, I think people are just, they're gonna hold back on big purchases like a home or a car, and they're just gonna work more and try to save more money, Unprecedented surge in home buyer mortgage payments. Mortgage payment on the 4-week rolling average of the median asking price. Yeah, so guys, they just raised interest rates 75 basis points. I believe mortgage rates are about to surge to like 8%. I don't think anyone could afford that. And people with adjustable, they're probably going to lose their homes, unfortunately. I mean, I feel bad for them, but, we just went through this, like, in 2008. You should know, but you got to pay attention. Listen, people just, if you do not pay attention to people like me, right? If you don't seek out knowledge, then you're gonna get kind of what you deserve, And, it's not fair. Life's not fair, and it's hard, and I try my best, and, that's why I'm here. Smash some likes. Share my videos so we can help save more people. Making housing the most unaffordable in history. Damn. Look at this. Home buyer affordability fixed mortgage index. This is fixed mortgage index. It's literally almost at the 2007 and 8 bottom. Like, we're almost there. So, yeah. Sending new home sales plunging. It's getting back towards the COVID dip in the 2019 levels or 2018 levels. 6% of listings had price drops. 6%. I can see more. Unprecedented surge in home buyer mortgage payments. Huh. That's this chart. The payments have... Just look at that. This will wreck people. Especially because everything else went up in price. You know, with inflation, energy, utility costs, gas. I mean, most Americans, a $500 difference in their monthly bills will wreck them. And we haven't had major layoffs just yet. So it's gonna be bad. I feel bad. Redfin Homebuyer Demand Index, negative 14% year over year. Yeah, this is it, guys. That's why I my last few videos were The Big Short, and then I played. There's a reason for everything I do, believe it or not. 35% of pending sales under contract within 1 week. Yeah. And it's happening quick. Homebuyer competition eases further in May. So, we haven't had any Lehman Brother moment just yet, like something big blowing up on the stock market, but it's gonna happen. It's probably gonna happen within the next 4 weeks. That's what I think and feel. So what is this? The engineered stagflationary collapse has arrived, and here's what's happening next. All right, so I basically pretty much talked about all this. I'm going to read the headlines. You guys could read this. It's on Zero Hedge, authored by Brandon Smith via altmarket.us. I'll just read the headlines. The Fed will hike interest rates more than expected, but not enough to stop inflation. Correct. I didn't read any of this. I just was going to, but, I don't want to make this too long. Markets will crash and unemployment will abruptly spike. Yes. Price controls. I don't know if they're going to do them. They probably will, but that's very bad for the economy, and historically it's never worked. Like, they cannot be this dumb, but they'll do it probably for midterms. Rationing, sure. Be ready. It only gets worse visualizing the coming shift in global economic power. So the One Belt, One Road will probably make China top dog because they have a manufacturing base. But here's what's funny. They also have the biggest real estate and commercial real estate bubble in human history. And two, the U.S. is their biggest customer. And if the U.S. isn't buying their trinkets, I believe they're going to have bigger problems than they even anticipated. And that's what leads me to WW3. When you have a population of like 3 to 2 or 3 to 1, male to female, you got to keep those guys occupied doing something. And they're going to, maybe send them off to exterior battles. I have to be careful how I word things, right? And that's usually why WW3 starts. It's a huge distraction from your own populace turning on you, if you know what I mean. All right, here's the article I really wanted to touch base on. JP Morgan, head of trading. Fed willing to crash stocks to hammer inflation, but Republican win sets us up for a year-end rally. I agree. But do they think by the midterms? Because I kind of feel like the Fed should have raised more by now already, and already have crashed the stock market to the bottom already to be able to pull this off by year end. I think they're too late to doing that. I mean, that means next week, like the stock market's about to drop like 10-20%, something like that. Like in the next 2 weeks, that this all has to play out. Literally in the next 2-3 weeks, for them to pivot, capitulate, and then stop. They'll first stop quantitative tightening, which they literally just started this week, and then they would be stopping it after what, 3 weeks or 4 weeks of doing it at the most. And then they'll stop rate hikes, and then what, by August, doing like just cutting rates down to zero? Like that's how quick everything will have to happen. So I agree with this JP Morgan article, except the timing is a little extreme. I feel like the market should be much lower by now, and the Fed should have raised a little bit more. Like they should have done like a 1.25% hike this past week for this to play out for the midterms. All right. Anyways, I'm gonna leave it at that. Smash some likes. Please share my videos. Go to my website. Join the private group if you want to make money like we do and not get wrecked. And find me on Twitter, everywhere else. I need to post more on Instagram. It's slacking. Till next time. Peace.